You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose. I just kicked my camera, so it's a little bit crooked. It's still a little bit crooked, but that's okay. Hey everybody, it's Jonathan Rose, and welcome to Masters in Trading Live. Masters in Trading Live, I get on here each day the market's open, 11 a.m. Eastern Time, go over the market, share some thoughts. Once in a while, we'll share our trade of the day. A bunch of things to cover today. The first thing that I want to do is, market's been very, very volatile. It's been very, very emotional. I want to give a couple of shout outs to some fellas in my community because they've just been doing great. So we're going to start with some shout outs. I want to talk about the Russell. The Russell is the first name of the big indices to hit its weekly 200 period moving average. I'm going to show you exactly what that looks like. After that, I'm going to talk about one of my favorite trades with the oddest of names. It's called the crack spread. The crack spread literally gives us the profit margin of oil refiners. It's like having access to real-time Apple's profit margin. How awesome would that be? Pretty freaking cool, right? That's why I love the crack spread. I'm going to show you all about that. Really appreciate everybody joining in the chat. Let's get to it. Michael, I'll make sure I get to your question as well, buddy. Let's start here. I got you here. Welcome, welcome, welcome. I got the chat up. I'm going to start with a few shout outs. This is a new section. We're going to have a few shout outs because I just love the vibe in our Discord. So the first one's going to be from yesterday. FCX, guys, copper. It's really been such a good trade. Kate shares that she's making some money holding some 37.5 calls, in for 98 cents, out for 255, in for 65 cents, out for $1.55. Kate, awesome. Glockenspiel. Very, very exciting. My second shout out is going to be to my good friend Kevin Hammer. Kevin's in our Discord. Kevin has got a trade that follows the crack spread. That's a trade that I'm going to go over today. This trade in Velo is a refinery. PSX is a refinery, getting close to making 200% on this overall trade. So great job. Those are two shout outs and two glockenspiels to start our Tuesday. Let's go. All right. Let's get serious now, guys. We're going to talk about the crack spread. The crack spread is the difference between the price of refined petroleum products like gasoline and diesel and the price of crude oil. This serves as a measure of the refiner's profitability. So hopefully you can see from this chart, this red line is the crack spread. I'm going to show you guys how you guys can access the real-time crack spread. These three lines here, these are refineries. I believe this is PBF, Velo, and PSX. These refineries go wherever the crack spread goes. When the crack spread gets slaughtered like it did here, the refineries eventually trade lower. When the crack spread turns, these refineries eventually trade higher. It is one of the greatest trades that I can introduce you to. So here it is, guys. Simply put, the crack spread is the difference between the price of crude oil and the petroleum products extracted from it. Click there. I got a little. Now I'm going to chart this on Thinkorswim, but you could also go to energystockchannel.com, and on there they have the 3-2-1 crack spread that you can look at in real time. 1 month, 1 quarter, 1 year. This isn't right. This is March 18th. Oh, no, that's right. That's right, March 18th, 2025. Boom, boom, boom. So yeah, so I'm going to put this in the chat, guys. Energystockchannel.com. And then you could just look up, that'll take you to the crack spread. I'm going to put this in our in the chat as well. But it's an easy way to follow the crack spread. A few basic bullets. The price of a barrel of crude oil and the prices of the different products derived from it are not always in sync. When volatility increases, like it's increasing right now, relationships break down. The role of the trader is to keep markets efficient. One of the ways that a trader can keep markets efficient is when correlated products break down, you might find a trade. So the difference in prices is an important indicator to oil refineries as it impacts their profit margins. To mitigate the pricing risk, refiners are using the futures to hedge the crack spread. That's why these stay in line, because the refiners are actually going in there to make trades to hedge their position. Crack spreads can be used as a market signal for price movements in oil and refined products, depending on whether the spread is tightening or whether the spread is widening. So we can buy the crack spread or we could sell the crack spread. I also want you to follow the crack spread because it gives you the profit margin of refiners. I'm going to make this, it'll all make sense. Hang out with me. I'm also going to give you a list of all the refiners to follow. So buying the crack spread, you expect the crack spread will strengthen, meaning the refining margins are growing because crude oil prices are falling or demand for the refined products is growing. So when the crack spread is rallying, demand for those refined products is growing. Selling the crack spread, you expect the demand for refined products is weakening, or the spread itself is tightening due to changes in oil pricing, so you sell the refined product. So here, selling the crack spread, when it's offered, that's extremely, extremely, extremely bearish for oil refineries. When the crack spread is rallying, like it's doing right now, this is the crack spread, right? Everybody sees this is rallying. This is going higher. Here it was going lower. Now it is going higher, a very, very strong move, and it's continuing to follow through. Here's a list of ETFs that you could follow. More importantly, the top 10 refinery stocks that you should be following. This is one of, if not the most reliable trade that I can share with you guys. Right now, the crack spread is so freaking strong. Look at this. Look at this, guys. Right? You see me use this as just where I share the expected move. Look at the refineries as the crack spread rallies. I'm going to do this here so you can see a list of the refiners, right? But you see the crack spread is rallying. Look. Velo closes in its expected move 75% of the time. Let's look for 3 years. Velo is an oil refiner. Over 3 years, it closes within its expected move 70% of the time. Velo gets outside of its expected move. It comes right back in. PSX. PSX closes within its expected move 75% of the time. Closes outside of its expected move, runs right back in there because the crack spread is rallying. Another one to look at, and this is actually something that we're considering initiating a fresh position in, Dyno. Dyno is a smaller refinery, hasn't really got the jump that Velo or PSX, but as long as that crack spread is rallying, which we definitively know right now it is rallying, all these other refiners are going to follow. They're going to eventually catch up Guys, this is absolutely one of my favorite trades. You guys in the chat, or have you been exposed to the crack spread? Have you guys had a chance to trade this? I know it's a really weird, scary name calling it the crack spread, but it is extremely reliable. Pause this, write down those top 10 stocks, those top 10 ETFs, and then Chris also shared an infographic in the chat. Yeah, it is a phenomenal trade. We're going to get to that in a little bit. Oh, what else do I have to show you? Here's another thing I want to show you. I said IWM hit his 200 period moving average. Let's check that out. I'm going back 3 years, looking at a weekly. John, yeah, crack spread is great, guys. It's a great trade. Learn that trade, crack spread. And on the YouTube channel, you could search on my YouTube channel, Jonathan Rose, search crack spread. You'll see some really good videos. Brian saying he loves the crack spread. Once you get introduced to this trade, guys, you will be blown away. IWM is the Russell 2000. We're looking at a weekly. This is the first major indice to hit its 200 period moving average, 201.72. Now, if I look at the QQQs, the NASDAQ, we are still about 40 points from its 100 period moving average. We're not even close to the 200 period moving average. If I go to the SPY, 100 period moving average is 510, 50 points away. So again, let's go back to that IWM, just reinforcing how weak this IWM is relative to the others. ADP says IWM is coming down there. I don't agree or repeat things like that. It's just speculative. IWM is going to trade 180. IWM is going to trade 230. Let's wait and see whether the support stays. Will the IWM rallies? The IWM will rally when volatility comes out of the market. When we're walking into a Fed announcement with volatility elevated, we are not going to rally before the news comes out. We may rally post-news. Hopefully that makes sense. I'm going to leave you with one final chart before I switch over to the all access, which is just one more time this chart of the crack spread making a very strong move. And you wait and see, guys. We are bullish. Refineries are going to catch up. It is a phenomenal trade, especially in this elevated volatility environment. It gets us long oil and it gets us away from the overall beta of the market. Like we always do, we're going to switch over to our all access. If you're not part of our all access and you'd like to learn more, we're running a promotion. And right when I switch over, we're going to have our number on the screen. Give that number a call, ask whatever questions you want, and I hope to see you in the Discord tomorrow. Thanks for watching, guys. Oh, no, before I get off, I promised I have a question I was going to answer from the beginning. Let me just scroll back to my questions. Michael. Hey, Michael. Sorry I missed your question, bud. And the question is, and it's going to be about the expected move. So our expected move, I'm going to go back to our VolViz chart. Does the expected range of an options contract change? So the expected move that we're using is the third Friday of the month to the third Friday of the next month. So this Friday, CCJ and every other name is going to give us new expected moves. So each one of these expected moves is the third Friday to the third Friday, and we fix them so they don't move because that is the expected move to start off, and that proves to be solid support and resistance. Okay? Hope it makes sense. Oh, I'm sitting here talking about screen share. This is what I was just doing on the screen share, guys. Expected move, expected move. Everybody in All Access, you got, yeah, my pleasure, man. Everybody in All Access, you guys hang tight. We'll be right back. Okay, guys, All Access hopping back on. Hey, Brian, any thoughts on NVIDIA this